Welcome to our second quarter video update. We are very honored and pleased to once again have Glenn Murray, Chief Investment Officer and President of Capstone Asset Management, joining us once again. And we also have my colleague and fellow portfolio manager, Maria Dawes. And Maria, why don't you kick us off with our first question to Glenn?
Sure. So Glenn, we had the pleasure of hearing your thoughts back in late April for our first quarterly update. And it's been a couple months since then, so maybe you can give us your opinion on what you think has been the biggest event or news story since we last spoke, and what sort of impact that has had on the world and on markets. I know it's a bit of a general question, so you can take it however you want.
Thanks, Maria. That really is a general and very broad question. Probably difficult to narrow down what's the biggest, as that tends to be a matter of perspective and economy, where people are at and where they live and so forth. Although it's not a second quarter event, for Canadians, I'd suggest the significant growth of COVID cases in the US is one major developing story that has the potential to have global implications in the economic recovery. In particular, for Canada, being both geographically close and economically integrated, it does present particular problems. One of the additional concerns I have is this appearance that we see from the outside of a lack of cohesion in the approach individual states and state to state and how they're dealing with that crisis, which really could contribute to a prolonged fight to get some control over it. This is particularly concerning as we have started to see indications of economic recovery, how quickly and effectively the US is able to contain their situation. It will have a definite impact on how the overall global economic recovery continues to progress. And unfortunately, this current situation also has nothing to do with any future outstanding risk of a second wave.
Thanks, Glenn. So we have had a lot of both monetary and fiscal stimulus measures put in place. And as well as for Canadians, we've had some of our benefits due to COVID-19 extended. So what are your thoughts on these measures that have been undertaken?
Yeah, I spoke a little last time about the policy decisions and some of my general concerns with the speed and distribution of the stimulus packages coming from the government, which I don't really think has improved much and has recently been highlighted by the We Charity controversy. But since then, we have received a fiscal snapshot, the update from the government, which revealed a very significant $343 billion deficit. This did include about a $71 billion loss of revenue. I believe that the government disadvantaged themselves by running deficits during the stronger economic years, the results of which was that we've entered this crisis with policy rates that never had a chance to normalize and handcuffed the monetary policy flexibility that was available to the central bank at the beginning of the crisis. Additionally, with these deficits, it's increased the country's starting debt load, which will automatically provide a weaker starting position for the fiscal stimulus that's available to them as they move forward. But as we look at monetary policy going forward, I believe the central bank will have to maintain low interest rates. In fact, they just indicated this Wednesday that they would maintain the current level until their inflation target of 2% was achieved. So if you look at their own forecasting, they have inflation of 1.7% in 2022. So we can anticipate or expect that we'll be in a low interest rate environment for some time. Additionally, and on the back of kind of that, I think they will need to continue to communicate this type of forward guidance to provide the clarity to the markets in which to operate and function efficiently and effectively. And I also expect with the ongoing COVID uncertainty that they will ensure continued market liquidity through their own quantitative bond buying program. On the fiscal stimulus side, what we've seen to this point really has been a response to fill the call it economic hole that's been caused by the income and revenue shocks of shutting down the Canadian Going forward, the government will need to address how it helps to stimulate recovery. And with little ammunition left for the central bank, that really will fall to the government. And they'll probably need to introduce measures to do that stimulation, such as infrastructure spending, some incentives maybe for consumers to spend, or incentives for businesses to invest. So in fact, on the 16th of July, the federal government announced a package to the provinces for approximately $19 billion that will be used specifically for that purpose of stimulating the reopenings of the local economies.
So Glenn, how do you think a second or potentially even third wave might alter that scenario?
It's very difficult to predict at this point, as I think it will depend greatly on how governments respond. Will they roll back openings? Will they reintroduce stay-at-home mandates? Are there some other types of initiatives that they're going to put in play to try and control the virus? A second wave of shutdown, to the extent that we saw back in March through May, would require the government to act again with significant financial support, as many businesses will not have recovered from the first round, and unemployment will be on the rise again. So I suspect there would need to be additional quantitative easing to keep the liquidity in the bond market and control rates. And if the room still exists, I think we would probably see another policy rate adjustment down lower. The problem is the government will be again responding to the necessity to fill a gap of income and revenue versus what we need for recovery, which is real stimulus. This situation will then result in just prolonging any opportunity for recovery and puts that starting debt level back higher or in a worse position. So if I step back from that, though, I really do believe that the governments or the provinces are going to attempt to avoid at all costs shutting down the economies to the extent that we saw previously in the early part of the spring. So that'll be a last resort from what I expect to see.